Alrighty. All right, we're gonna give it a few minutes, let some people step into the stream. But today is a very interesting day. We have a lot to talk about. We have some specific structures that need to be discussed extremely thoroughly because on a day like today, we really need to understand what's happening from a structural perspective. That's the only way we're going to be able to flow with price action like water in a river. And as you guys know, I say this every single live stream, the market structures are going to dictate who's trapped and who's in control. So if you have an edge in the stock markets, you need to take somebody's cash. That is the truth of the game that we play. If you want to win, you have to beat somebody. If you want to score, you have to score on somebody. That's why trading is very relatable to professional sports, and we can learn a lot from professional athletes. What's going on? Good afternoon, Angel. Nice to see you. And before we step into the pre-market notes and all that good stuff, remember with me, there's zero hindsights. We're going to do a run through of the Discord for today, and I'm going to show you guys the Substack as well. So we got some people in here. Nice to see you guys. Let's go ahead and begin. So we're going to go ahead and jump firstly into the Discord because I want to show you my main, well, the main the main, why am I fumbling my words here? The main idea for today is going to be the short that I took at all-time high. It's very important to understand the parameters of this trade because the parameters of this trade are extremely designed to focus on my personal situation with my portfolio. And what I need in my portfolio is something called insurance. That's what we picked up today within hedge by shorting 6,800 all-time high. So here's 6,800 all-time high. If you guys are in the Discord and you tuned into the pre-market live stream, we talked about how price action was working on a false breakout of all-time high. All-time high is also yesterday's high. So we know that this level is essentially the only macro resistance on the chart. Macro levels are the only levels that I trade personally. We've talked about this many times. My personality, I love to swing trade. I'm not too aggressive on the smaller time frames because day trading is not my cup of tea. So for me, I love to swing trade macro levels. All-time high is the only macro resistance. So when I looked at my portfolio, I said to myself, if the market is unable to perform new breakouts above all-time high and executes a proper breakouts, creating new breakout structure, then I need to protect my accounts. Essentially, I need to have an edge. And the external context for today is very important to understand. We have something called the government shutdown, right? Economic reports, data reports, things like that, they're being delayed or they're simply being canceled. I'm honestly not too sure what's going on with the data reports, but with that external context in mind, and even the fact that the scheduled economic reports are not until Thursday, we know that the market has not the best odds of creating that breakout structure, right? So test, can you guys hear me? Test. Sounds good on my part. But anyways, now we have to talk about the watch list because the watch list is something that we discussed thoroughly in the pre-market as well. Just think about it logically. In order for ES, in order for SPY, in order for the NASDAQ to break out all-time high, then the watch list has to showcase excessive strength. We have to see a lot of green. We have to see healthy tickers. And look at the board today. Microsoft minus 1%, Apple flat, Google minus 2%, Tesla minus 4%, Nvidia went green to red. A lot of these stocks, the Magnificent Seven, they were not showcasing excessive strength, right? And that can simply mean sellers stepping in and sellers printing a false breakout of all-time high. So that's the Discord for today, right? We talked about shorting all-time high, and we essentially talked about the parameters for the rest of the trade. Since it's a hedge, I really don't mind. The last time I had a hedge, guys, the hedge went from all-time high to plus 6R. but I simply only have this hedge to protect my accounts. So I'm going to keep this hedge active until the market literally continues to sell off and sell off and sell off into bigger picture levels or better higher time frame levels, or I will take the break even stop loss. That's what a hedge is designed to do. That's the goal of my trade in this specific setup. And the best thing about this setup is that if I quickly delete these notes right here, what do you guys see on the chart? You guys should be seeing this best entry model right here for beginners, the Fibonacci trap, right? So if you invert the chart, right, you take a look at the Fibonacci trap from the September 2nd example. If you invert the charts, that's essentially what happened today to the downside, right? Because we experienced a false breakout of all-time high, and then we retraced into all-time high at the RTH open. This is the 9:30 a.m. 15-minute candlestick. We retraced back to all-time high and we sold off. So sellers sustaining price action below 6,800 all-time high is a perfect example of what a Fibonacci trap looks like to the downside for a false breakout. That gave me an extra edge in taking the hedge at 6,800. And then, of course, combining everything else, the watch list, combining the fact that the external context wasn't there for sustainable breakouts, right? It's not like we had CPI in the pre-market. It's not like we have 10 a.m. news or anything like that that could sustain excess volume and volatility for that breakout. So when I put all of these things together, that basically gave me the go, the AOK sign and the go sign, the go signal to click sell at 6,800 with a wide 20-point swing stop loss. And this position is going to be protecting my Tesla position because Tesla is looking like it is going through some consolidation now. It's going through a little bit of pullback, right? So let's say Tesla is to break down the daily 20 EMA, and if this breakout trend is to conclude and we are to pull back a little bit deeper, then I have that hedge on. I have the hedge protecting my portfolio, right? So that's essentially the main idea behind the short for today. That's discussed thoroughly in the Discord, which is right here. I sent out the screenshot. This is when I took the fill. And in the pre-market this morning in the Discord as well, we discussed thoroughly that if you wanted a hedge, 6,800, printing a false breakout of all-time high, in addition to the external context, it made a lot of sense, right? And if I drag over the Substack now, this is a post that we're going to send out at 7 p.m. So you guys in the live stream right now, you guys are getting a sneak peek of the 7 p.m. Substack that we're sending out. So if I go into here and we take a look at the highlight for the day, which is the MES short, we zoom in here. So this is the broker statement. It has 6,800 short 2 contracts. So you can see the average price right here is 67.9987. So 6,800 minus 2. So I had $200 worth of risk if I got stopped out at 68.20. And that's how the P&L is looking right now. And then if you watch this video right here that I have in the Substack, it's going to be released to your email 7 p.m. later today. So in 3 hours from now, you can watch this video that goes through the pre-markets live stream in the Discord where we talked about all-time high potentially being a fantastic hedge shorts, right? So this is how price action was looking at the time. Stay tuned for it. I'm excited to just continue updating and refining the Substack. I'm having so much fun. As you guys know, one of my passions is being an author of the markets. So the Substack is going to be filled to the absolute brim with education and value adds for you guys. And you guys are going to be able to view our journeys in real time as always. Before we jump into the pre-market notes and the intraday setups and all that good stuff, if you have any questions, comments, concerns about the 6,800 short, you can let me know. And we'll also discuss the premiums that are going to be harvested very soon. So October 10th is this Friday. When the market closes on Friday, we'll be extracting the 6550 puts, the 6520 puts, the 6470 puts, and the 6300 puts. Those are likely to expire worthless on Friday, October 10th. Because they're expiring worthless and we sold these premiums, we're going to collect the premiums, right? That somebody juiced in order to buy the contract, in order to buy the put contract. We had to sell it to them. They bought it. They bought the premium. But if it expires worthless, then we're collecting all those premiums. So stay tuned for what happens on October 10th. Are we going to collect these premiums? Are we going to pull back? Let's go ahead and measure it from right now. Are we going to pull back another 3.2% into 65.50 the next 3 days? Probably not, right? So we're going to likely collect all of these premiums. The option premium selling system is very clean, it's very consistent. And if we do get assigned those contracts, if we do have to be assigned those contracts, 6,500, that's a fantastic area that we would want to buy anyways. So it's a passive way of collecting income while waiting for the dip, right? All right, so that's the Discord, that's the Substack, and that's my 6,800 all-time high short from this morning. Let's go ahead and jump into the notes, and let's discuss the intraday setups, and let's discuss the new market context heading into tomorrow. So for today, expecting another range-bound day as the market awaits end-of-week economic reports. Price remains entangled within last Friday's range, developing bullish consolidation at the range high via daily higher lows. The daily higher lows must stick or volatility can potentially return. Bulls are securely in the driver's seat as they print daily higher lows. Today's overnight low is also a higher low above yesterday's low as price knocks on all-time high. Bulls must continue to sustain these patterns or we can start to trap range high buyers and liquidate into better supports. The external context for today remains dry, and the end of the week houses more important catalysts. And by the way, because of the government shutdown, we'll have to see what happens to these catalysts on Thursday and Friday. Therefore, we can presume price will continue to digest within the range high within last Friday's range. For buyers today, defending above the overnight low 67.74 will showcase strength. It's important that if price does pull back into the overnight low or yesterday's low 67.6650, that's bulls print a false breakdown. Right? If they are unable to do so, price can contest last Thursday plus Friday's lows, which is the bottom of the higher time frame bull box. 67.4150 through 67.54 failing will be confirmation that the intraday bullishness has concluded for a macro time frame pullback via intraday liquidation. Sellers must break down yesterday's low 67.66, then last Thursday plus Friday's lows 67.4150 through 67.54. So let's go to the chart. Off of the false breakouts of all-time high, we need to see confirmation that buyers are trapped, right? So just because the pattern is identifying itself, just because it's showcasing itself, doesn't mean that the pattern is confirmed. We need to see price action breaking down structures or selling is non-existent, right? It doesn't matter if we print a false breakout up here and then print a higher low, all-time high is likely to be expanded upon. But notice how when we start to dip and NVIDIA goes green to red, and then we break down the prior day's low, connect the dots right here, you notice that buyers obviously attempted to sustain the prior day's low. They attempted to print a false breakdown, right? But the overnight low became resistance, and we could not trap sellers at the prior day's low. So that means that buyers got trapped. If you lost 1 hour here trying to long the prior day's low, it's one of those situations where because you're getting long so high up in the range, you have to be willing to take that bet. But are you going to give up on the structures below? Obviously not, because we talked about in the notes that 67.74 holding above will showcase strength. It's important that if price does pull back into the overnight low, 67.66, that bulls print false breakdown. But if they are unable to do so, price can contest last Thursday plus Friday's lows, which is the bottom of the higher time frame bull box, right? Just because volatility it has returned on the intraday time frame doesn't mean that you have to give up on the better supports below. A lot of the times traders will lose in a situation like this trying to trade the false breakdown of the prior day's low, and then they forget to zoom out and look at the better supports, which are down here at last Thursday and last Friday's low. How do you identify the fact that last Friday's low and last Thursday's low are the better supports? Well, first of all, we're getting volatility into that structure, and you know that the external context is very light. So how likely is price action going to trend below the significant support, and how likely is price action going to print 80 points, 70 points, 60 points for the day? It's very unlikely because the external context is just not there, right? So when you see that price action is selling from all-time high into last Friday's low, that's an edge, right? You can play for selling exhaustion into last Friday's low. We talked about this very thoroughly in the trade plan section, that if the Monday low fails, and we talked about this as well in the pre-market live stream, if the Monday low fails, then you should be willing to risk another 1R at the better support 67.4150 through 67.54, but apply the entry models, because if there is to be a surprise, you will be able to protect yourself, right? If we are to just cleanly flush through everything off of a surprise, you have the entry model, the false breakdown, and the Fibonacci trap protecting you, right? So 67.54 ended up being that main line in the sand. And you're asking yourself, Derry, why does this zone matter so much to the time frames? Why does this zone dictate who's trapped and who's in control on my intraday time frame? Because you have to zoom out. Once again, you have to zoom out and understand the bigger picture, what's actually happening at these levels. Last Thursday's low is right here. Last Friday's low is right here. Let's connect the dots. Last Thursday's low is defending a breakout above the previous all-time high. Last Friday's low is defending a breakout above the previous all-time high. So what does this tell you? It tells you that if bulls are to remain in control, then the breakout above the previous all-time high should hold, right? We should hold this box at the top of the range, literally to showcase that bulls are strong. Think about it logically. If buyers are holding a price so expensive, so high up in the range, then of course the markets must be showcasing excessive strength, right? And optimism. If we are to break down below all of these structures that we created literally since October 2nd, then we could be seeing weakness. Then we can be seeing red. That doesn't necessarily mean that the macro time frame is going to flip bearish, but the intraday time frame can for sure flip bearish. That's what happened between September 23rd and September 25th into September 26th. The intraday ranges were bearish, but the macro timeframes were not. That's why we ended up going from the FOMC range on September 17th back to a new all-time high, and then we broke out the all-time high and created new breakout structure. Right? So all of this may sound complicated on paper, but when you spend time analyzing this chart, it's a pure unbiased approach. When you spend some time analyzing this chart with the only thesis that who's trapped and who's in control is going to determine where you take an entry on the charts, then these structures start to open your eyes. Because at the end of the day, the price action is the only thing that's going to tell you if a specific side got trapped or if a specific side is in control. And that's the number one premise. Doesn't matter if you're an investor, swing trader, or day trader, that you need to utilize if you're going to make money in this game. Why? Because you have to take your opponent's money, you have to score on your opponents, or you're simply not going to win. And be grateful under the chart, right? The chart is king. We can't tell it what it wants to do. We have to align with whatever it's doing. So if sellers are in control and price action is taking elevator trips down the range, we have to respect that. We have to understand where we want to take advantage of selling exhaustion, but are we going to buy every single dip? Probably not. Vice versa. If price action is printing bullish time frame alignments, are we going to be shorting every single high? Absolutely not, right? So we have to be able to align with the charts. Let's go back to the intraday setups. So if you took a -1R at the prior day's low false breakdown, that's all good. That was for sure a viable setup. And if I was still day trading these intraday levels, I probably would have taken it as well. But I also would have taken the false breakdown of last Friday's low. And the beautiful thing about the false breakdown of last Friday's low is not only is it the most significant intraday structure on the chart, going back to the macro time frame bull box, but it's also giving you perfect criteria to enter long. Why? Because the entry models are literally as clear as possible. So let's go into a 5-minute chart and talk about those entry models. Number one, is there selling exhaustion into your high quality zone? Yes, there is. We're selling off all day into the afternoon at this high quality area. So we're minus 50 points, right? Are we expected to have a 100-point day today? Probably not, because the external context is just not there. It is possible, of course, but we have to be willing to bet nonetheless. So we have an edge, right? We have an edge with selling exhaustion, and we have an edge because we're anticipating a reaction at the high quality area, the bull box, right? If you're a day trader, this is a high quality area to you. Then we have to look for an entry model. So when you see that price action is hovering below the area, right? You have this 1150 rejection, and then you have the 12 p.m. candlestick hovering above, and then we have a slight little reaction right back below it. But the main idea with this little box here that I'm going to draw is that, are you noticing that sellers are literally exhausted? Exhaustion is so easily identified if you have the patience to not have the FOMO, right? To just click buy, I need to get in, just have a little bit of patience, right? If sellers are truly to be strong and continue weakness on the charts, then we shouldn't see this 12:15 p.m. low. We should see a continuation, right? We should see a continuation of breakdown into 67.4150 and potentially the next zone below 67.16 and 67.28. The fact that price action is stalling in 67.4150 and 67.54 is giving you all the criteria in the world to tell yourself that this could be an optimal area to look for a long off of trapping sellers now that are chasing a breakdown. If you wanted to short today, you short the false breakout of all-time high. If you're late to the party, you can short 67.8750. But retail traders, they're not shorting all-time high. They're not shorting 67.8750. They're shorting when the breakdown has already commenced into significant support, right? So all the short chasers that are getting trapped at 11.50, they're getting trapped at 12.20, they get trapped again at 2 p.m. If you're looking to long today and you took the loser at Monday's low, we should not be giving up at 67.4150 and 67.54. You even get the Fibonacci trap to be presented as well. If you draw a low to high here, it worked out fine. If you draw a low to high to here, it worked out fine as well. So remember, what is the Fibonacci trap? The Fibonacci trap is volatility, right? So let's get some arrows. You know that price action is volatile today because we broke down the previous day's low. And then you're looking for recovery. You get that recovery very, very, very obvious at 12.30, right? Because we should be continuing to break down here at 12.15, but we don't. So we recover around 12.30, and then you get pulled back into 67.54. 67.54 is your line in the sand. That's the last Friday low right here. It's obvious that price action is printing a false breakdown with that low of interest. And then we literally chop it out for the rest of the day, although we do end up getting some targets at the close. And this is a great position to look to be holding overnight. Maybe your stop loss can be at break even or just retain your original stop loss, right? So this is a great position to have overnight. I see some questions. Let me go ahead and answer them for you guys. I had an entry at 786 fib trap, but stop was too tight. I was in the right spot, but execution was not. So this specific example, I will say, is a little tricky because you have to understand the bull box. The bull box is 67.4150 and 67.54. That's the bottom of the bull box. So whenever we have a stop loss, right, our stop loss has to be placed at a significant spot of invalidation because the bottom of the zone, 67.4150, is the bottom of the bull box on the higher time frame. You know that if sellers break down Thursday's low, then you want to get out of your long from a day trading perspective. Your stop loss at 67.4150 makes sense. So if I was day trading today, day trading these levels, as you guys know, I wait for the macro levels, but for day trades, my stop loss 100% would have went 67.40 or 67.39, somewhere like that, right? Because I want to be behind last Thursday's low. That's the better structure down here. And even if I were to get stopped out at 67.4150 because 67.54 failed, I wouldn't mind trying again at this level, something like that. All right, and then from there, your 1R gets hit at the close, and then you can scale out 25% of your position. And of course, with futures, we get access to overnight trading. So with futures, you really don't mind holding this position overnight, especially if you scaled out 25% of your position already. So let's say you had 3 contracts, 3 MES contracts, you scale out 1, that's 33% of your position scaled out. And from there, you go from 3 to 2 contracts, so your stop loss is now 2 contracts down here, and you simply We'll keep this position open to see if we can retrace into the original breakdown trigger, which was 67.8750. This will be an optimal backtest and an optimal area to look to short tomorrow, or a place to take targets if you longed last Friday's low false breakdown. I just didn't see bullish FG from below last Friday's low. Yeah, that's why the structure is so key, because you're not going to hesitate when you know that price action has entered such a significant area off of selling exhaustion, right? So understanding the contextual significance of last Friday's low and last Thursday's low, that's going to help you with literally just closing your eyes sometimes and taking the fill. Still time to get in long for MES. For me personally, as we head up into resistances, you could look to take the recovery of Monday's low. So here's Monday's low right here. And if you look to the right, we have a rejection at 12:30, and now we rejected a little bit before the close. It looks like we're trying to recover Monday's low, but I would say if you're trying to get long today, your best risk to reward would have been last Friday's low. Just purely based on what price action was telling us, and purely based on the notes for today as well. We know that 67.4150 to 67.54 failing will be confirmation that the intraday bullishness has concluded, such that that's a fantastic spot for any demand to be active from an intraday perspective, right? So if you're a buyer and you bought 67.54 last Friday's low off of the Fibonacci trap, or you simply just bought the false breakdown, you're going to want to target a 67.8750 level, for example, off of the recovery of the prior day's low. So the prior day's low is a great spot to scale out, but in my opinion, it's not a great spot to completely take off your position. You're not going to get the best risk to reward here. If you want to get 1R on this trade, you want to go into cash at the close, no problem. But in my opinion, you should be holding a little bit of this false breakdown down here if you bought it, 67.54, and looking to get 67.8750, which is the original breakdown trigger from this morning, right? And even better if you can get back to all-time high. You don't mind risking your points to get better risk to reward, especially because if you already scaled out at 1R, that helps you a lot with the psychology. Helps you a ton with the psychology. So just to reiterate what happened today, I ended up shorting all-time high. The main premise behind that short was because if buyers were to truly be trapped off of the false breakout structure that was developing, I needed a hedge on my portfolio. So I didn't mind shorting 6,800 straight up. And then the false breakout got confirmed because we ended up breaking down below the overnight low, and we broke down below the prior day's low. The prior day's low has been acting as resistance. However, we have to remain with an unbiased approach to the charts. So 67.4150 and 67.54, that would be our ideal support for buyers to defend purely from an intraday perspective. So all-time high is the only macro level on this chart right now. 67.54 printed a fantastic false breakdown. You even got the Fibonacci trap entry model to present itself. So anybody that bought 67.54, that's a great trade. And if you took a loser at Monday's low, that's a great trade as well. You just have to be willing to bet your points there and not giving up on the structures below. We talk about that all the time. Remember, your goal as a professional trader is to be able to flow with price action like water in a river. We don't have an opinion. We don't have an ego. We simply follow the chart because at the end of the day, the chart is our king and we have to follow it, or else we're going to end up in a very bad position, right? Because our opinion is just pure gambling. When we are looking to flow with price action, we have to then execute an edge via a setup. And your edge, a trading edge, literally means you have an advantage in the markets. But what does an advantage actually mean? An advantage means you have an up on your opponent. So if you're buying, you need an advantage against sellers. If you're selling, you need an advantage against buyers. That's why who's trapped and who's in control is the number one premise in every single trade that I take. And in my opinion, it's the number one ideology in the stock market, period, right? Because you have to be a winner. You have to win or you're going to lose. Simple. The chart can only go up and it can only go down. Less volatility at this time too, yes. The government shutdown is a little interesting because it's one of those external contexts that could actually create more consolidation and less volatile regime. It's very interesting, right? Usually, when we have external context in play, the market is more volatile. But in this specific situation, maybe it could be less volatile. We'll have to see what happens on Thursday and Friday with the economic reports that are scheduled. But again, we'll just have to wait and see, right? Anything is possible. The structures are going to dictate what happens, anyways. Is that Friday Sunday gap significant? I noticed that created resistance for buying. Yeah, so the prior day's low, yesterday's low, is essentially the gap fill. Exactly. Right? So the prior day's low is a higher low, and it was the gap fill. The gap is right here. We ended up filling. Well, we didn't completely fill it, right? Because the complete gap fill is right around here with the close, 67.65, and yesterday's close, or excuse me, yesterday's low is 67.66.50. But anyways, yesterday's low is now the new structure, right? So we're not talking about the gap fill anymore. We're talking about yesterday's low. But yes, yesterday's low was created because of the gap fill support. Buyers bought the gap fill, and we ended up going back towards all-time high. But the prior day's low, obviously, that's the new structure that's there presented to us. So that becoming resistance today off of the failure around 11 makes a lot of sense. But now it looks like buyers are trying to recover the prior day's low, which is definitely a good bullish indication. At the end of the day, though, when you zoom out to the macro time frame, this box, the bull box, 67.4150 to 6800, this is just pure macro consolidation as we await the next big trend. As you guys know with ES, we consolidate and then we expand. So all of this price action since we broke out all-time high on October 1st is just pure consolidation, and we're waiting for something to happen, right? We're waiting for another breakout of all-time high, or we're waiting for a breakdown below 67.4150. That's going to create the next trend leg. So for example, on September 23rd, we broke down, or excuse me, on September 24th, we broke down significant support. This led to a multi-day trend to the downside. Actually, on September 23rd is when the trend started. So this is a multi-day breakdown. This created a nice little multi-day trend. And then we ended up buying support down here, macro support, buyers stepped back in, and we created another multi-day trend. But notice all of this consolidation right here, and then we get a trend. All of this consolidation right here, and then we get a trend. All of this consolidation right here, and then we're looking for the next trend. We have absolutely no clue where price action is going to go. We don't know if sellers are going to break down, and we don't know if buyers are going to break out. But for the time being, we can fade the edges because the external context is simply not there. In a situation like this morning, the all-time high being faded is really no surprise. The bottom of the bull box getting faded is no surprise. The market is just showing you that it's continuing to consolidate within a defined range, and we're literally waiting for news to create the next trend, right? We'll see whenever that event takes place because the government shutdown is making things a little bit confusing. So we'll see when the next economic report takes place, right? We need some sort of a jobs report, FOMC, CPI, PPI, whatever, or we just need a surprise. Other than that, that's today in a nutshell. All-time high 6,800. That's a fantastic hedge for anybody that needed it. The false breakdown of last Friday's low, that was a fantastic opportunity for anybody day trading. The Fibonacci trap was presented, and then the classic false breakdown entry model was presented. The failure of Monday's low created volatility into better supports. So if you took Monday's low, the false breakdown, this one was a loser, but obviously you shouldn't give up on the better supports below, especially when you're considering a big edge of buying any support, selling exhaustion, which is very, very, very important. Let's see, it is 4:36. So I'm going to go ahead and save the book for another time because my voice is getting a little bit raspy here. And today was a fantastic session. It doesn't matter if you shorted all-time high or if you bought the lows at last Friday's low. I believe there was a lot of opportunity from an intraday perspective. Not much opportunity from a macro perspective besides the all-time high shorts. We still need to see the bull box break down if any of these better supports on the higher time frame are going to come into play. But other than that, if you're a day trader, I really do feel like there is a ton of opportunity today, a ton of opportunity. And I explained all of the setups that I would have taken in real time. But obviously, you guys know with me, I am a macro time frame trader. So that's why I like the short at all-time high to hedge my portfolio. And I'm waiting for a deeper retracement, 66.80 and 66.93. That's a fantastic, fantastic spot to look for a BTFD type of setup, right? BTFD. If you guys know, you know. Thank you guys so much for listening and tuning in. I love what I do. Honestly, I'm so blessed. I'm so grateful. This game is so fun to me. And I talked about with some members and some people today that understanding how to control your psychology really just comes down to being grateful for having this opportunity to trade. There's so many people in the world that would kill to be in the positions that we're in, right? Such that if you're simply grateful to have the opportunity to open a brokerage account and to click buy and sell and to participate with the trillions and trillions of dollars circulating in the S&P 500 and the Nasdaq, I think that really opens your mind to how blessed we are, and that takes the negative emotions of trading into the dumpster, right? Because you're just going to focus on being better. You're just going to focus on the positives when you're grateful to participate in the game, right? So that's the best way to revoke our egos. That's the best way to stay on track. And that's the best way to journal and be honest with yourself when you're simply grateful to participate in the game, right? I will always talk about the psychology of trading in these live streams, not only the process and the edge and the setups and my trading and Rich's trading, but I will talk about the psychology nonstop, because psychology at the end of the day is what makes the stock market the stock market. It's market participants versus market participants. It's buyers versus sellers. It's just one big game of chess. Who can get the advantage over the others? And as you guys know, chess is just pure psychology. So thank you guys so much for listening. I'm going to see you tomorrow. And if you are subscribed to the Substack, let me go ahead and link it in the chats. Please subscribe to the Substack. You're going to get all of what we do in Tradingwarz for free. Link it in the chat right there. Make sure you subscribe to the Substack. We're going to be sending out the next post at 7 p.m. Eastern. Always grateful regardless of my performance. If I lose, I learn something. Exactly. That's a great mindset. If you lose, you learn something. Fantastic mindset. I have so much journals. I have so much documents, so much of this, so much of that. But those are just words if I'm not learning something from it, right? So obviously that is always a big, big goal. And if you're going to hit your goals, you got to keep learning and you got to be better. So heading into tomorrow, we will see what happens with the false breakdown of Friday's low. The false breakdown of Friday's low is now an absolute must hold. Today's low of day at 67.47.25 cannot fail. If today's low of day fails, the entire structure for the Wednesday, October 1st breakout structure above the two previous all-time highs right here. I'll just show you when I connect the dots. The whole structure up here will come collapsing down if today's low of day fails. So that's why I have the hedge. In case that is to be the scenario tomorrow, my portfolio is protected. As you guys know, I'm primarily long in the Magnificent Seven. So if the S&P is going down, the Nasdaq's going down, my stocks are probably going down too. So you can use futures as leverage. We'll also see if we can backtest the now resistances. So let's go ahead and change these to red. 67.8750. The pre-market high right here is a significant inflection point from the intraday perspective. That's going to be a very important spot for sellers to hold if it does get back tested. And then we also have today's overnight low area, which is very important for sellers to hold as well. And then they must break down today's low of day if volatility is to continue. The premiums will be collected October 10th at the close. 65.50, 65.20, 64.70, and 6,300. All of these premiums will be collected on October 10th. We're not anticipating a minus 3% move by October 10th. But obviously, if that's to be the case, we don't mind getting a sign there anyways. Thank you so much for listening, guys. If you need me, if you need anything, tradingwarz.com. I really take pride in coming out to these live streams, and I really take pride in my community because we need to be accountable. We have to be accountable for our mistakes, even for the things that we do well. Because if you're not accountable for these things, then you're just going to end up in the endless rabbit hole of trading, which is just randomly clicking buy and sell without actually understanding what you're doing. So I love the community because it's a place for people to be accountable. Whether you're doing very well or you need some help, the community is there to be of value and to support one another. Trading is also a really big niche. Nobody is going to understand trading unless they're traders. So you need a community. You need people to support you because at the end of the day, if you're alone in this game, in my opinion, it is almost impossible to be successful. You cannot be alone. You need a team and you need a family. That's what we are at Trading Wars. Tradingwarz.com if you need anything. And I will see you tomorrow morning for my Discord members. I'll see you bright and early tomorrow morning. Thank you so much. Thanks, Derry. Sure wish I was here for the morning open. Yeah, it was a very interesting day. It's a very interesting day. Let's hope to see if the volatility is going to continue into the rest of the week, because volatility is the best, right? Volatility equals opportunity, and today is a prime example. Make sure you guys rewatch this live stream. It's been fantastic, and I will see you tomorrow. Avoid the scammers, please. Please do not fall for the scammers. We don't have crypto. We don't have a copy trade program. Tradingwarz.com and the Substack that we're now doing is pretty much the only places outside of the Discord where you can contact us, the real Rich and Dairy. Thank you so much. I'll see you next time. Enjoy the rest of your day.